up, crypto warriors? It's Sultan Crypto back at it again. Today is Tuesday, August 11, 2020. I love being wrong because that means in that instant I learned something new that day. Neil deGrasse Tyson. Before I continue, please smash the like, hit that subscribe button if you're new around here. This is my third time attempting to record this video, so give me the support by smashing the likes and leave a comment in the comment section below. In this video, I'm going to be going over a study or a report coming from some investment group or something that talks about why stock to flow is wrong, and I'm going to be leaving that article and several or three other articles from Medium in the comment section below. This way you guys could do your own research as well. Sometimes we have to hear the other side, their argument as to why they think that our argument is wrong. Sometimes it's good to get out of our own echo chamber. It's good sometimes to hear the other side. All right. With that being said, let's get into it. The chameleon model. Why Bitcoin stock to flow model is fatally wrong. This is coming from strixleviathan.com and their blog. We believe that the model's accuracy will likely be about as successful at forecasting Bitcoin's future price as the astrological models of the past were at predicting financial outcomes. Astrology was indeed considered a mathematical science in the early 1900s. With a beginning, like an introduction like that, you already know where this article is going. Chameleon models. Stanford professor Paul Plefdare, I butchered that name, I'm sorry, coined the term chameleons to describe models that are built upon dubious assumptions and are given more credence than they deserve. In this section here, to introduce stock to flow and what it is, PlanB, the author of stock to flow, PlanB then plots Bitcoin stock to flow against USD market cap as well as two arbitrarily chosen stock to flow data points for gold and silver. Now he's saying that these two data points for gold and silver was arbitrarily chosen. However, this is, I think it's disingenuous to say that, because this is at the time that the stock to flow model was released. These were the actual market caps for gold and silver. So I don't understand why they would say that it's two arbitrarily chosen data points. But what do I know? Scroll down some more. The two randomly chosen data points for gold and silver are in line with Bitcoin's trajectory and presented as further evidence of the hypothesis. Yes, we saw that. Problems abound. No evidence or research is provided to support this idea other than the singular data points selected to chart gold and silver's market cap against Bitcoin's trajectory, particularly in this situation where there is a large degree of freedom in which a lot of random data points or data can be fit to a specific outcome. So he's seeing that he just chose those numbers and he's fitting he's making it fit to get the outcome he's looking for. Gold and the dollar. Stock to flow has no direct relationship with gold's value over the last 115 years, as can be seen in the scatter plot below. Stock to flow has no direct relationship with gold's value. That's what he's saying right there. Gold's market cap held valuation between $60 billion and $9 trillion, all at the same time stock to flow was at 60. So while the stock to flow was at 60, the gold stock to flow was at 60, he's saying that the value went from $60 billion to $9 trillion as far as the market cap is concerned. Now, what I think he failed to realize is the fact that during all that time, there has been a lot of money or currency printing. All right, so that within it, like that itself also drove the price of gold up. And that's just, in my opinion, of course. A range of $8 trillion is not very indicative of explanatory power and lends itself to the obvious conclusion that other factors drive gold's USD valuation. Yes, inflation. So this scatter chart right here, he said he updated it on July 2nd. The graph above has been updated in response to feedback that the analysis is invalid due to the market cap values expressed in nominal rather than real terms. The graph above now includes real market cap to demonstrate the same conclusion can be reached. The range of values is reduced from 8 trillion to 6.5 trillion. Like, give me, 2% of that, man. That's all I need. Highlighted this right here. $1 in 1915 is now worth 4 cents because of inflation. The dollar lost 96% of its value over the last 105 years. So yes, that will make the price alone increase over that time. It's not that, I don't even think it's a real increase in price. It's just that the value of the dollar keeps shrinking, against real assets. So I don't know. What do I know, right? Many cryptocurrencies which utilize Bitcoin's code have the exact same supply schedule as Bitcoin, and everyone understands their stock to flow values has nothing to do with their future or current valuation. Yes, that's because, although he makes a valid point there, as far as them sharing the same code, the only thing that gives them quote unquote value is the name Bitcoin. From Bitcoin Cash to the fork of a fork, Bitcoin SV, to Bitcoin Gold, to Bitcoin Diamond, to Bitcoin Green, Red, Yellow. Like, there's a ton of different Bitcoin out there, but the only thing that gives them, quote value is the fact that they have the name Bitcoin, and people are speculating that if the first Bitcoin, the original, went to all-time highs of 20,000, that, oh, this cheap thing over here, I can get, thousands of those, and they will eventually go to $20,000 as well. And that's what people are thinking. 235 billion to infinity. Originally, I thought the 235 billion was talking about the market cap of Bitcoin, but it's not. By 2045, the model estimates each Bitcoin will be worth $235 billion. Let me read it again. By 2045, the stock to flow model, estimates each Bitcoin will be worth $235 billion before eventually converging to infinity as Bitcoin's flow approaches zero. And he gives some charts right here and some graph right here about discoveries over time, or differences over time, and the stock to flow model through design, and the stock to flow projection to 2045. So in only 25 years, Bitcoin should be worth 230, not the market cap, per Bitcoin. That means the Winklevoss twins, right, who at one point held about 2% of all the Bitcoin circulating Bitcoin, they will be worth quadrillions of dollars, if I'm not mistaken. Utilizing the estimated slope intercept formula is making the most naive prediction possible, because Bitcoin grew by X in the past, it will grow by X in the future. One should remember that past results are not representative of future returns. Remember that. Just because something happened in the past, just because Bitcoin saw a 9 million percent increase in value over the last decade, doesn't mean that we'll see another 9 million percent increase over the next decade. And that's true. A marketing piece or research paper, and this is the conclusion right here. Investors should be highly skeptical of this model, even if they believe Bitcoin is digital gold. The stock to flow paper is not proper empirical analysis, but more akin to a marketing piece in which the author is trying to convince readers that Bitcoin is going to be worth a lot more tomorrow. This may or may not turn out true, but it has little to do with Bitcoin's supply schedule. I believe that it does have to do with Bitcoin's supply schedule, because as we've seen, after each halving, the supply gets cut in half and the demand either stays the same or increases. And even if it stays the same, if the supply stays the same right now after this third halving, the price, there still isn't enough to satisfy everyone's needs. But we know that the demand isn't going to, I said the supply, I meant the demand isn't going to stay the same, right? Because the supply got cut in half. the demand won't stay the same. And we're seeing a lot more people coming into the space, a lot more institutions coming into the space because they want Bitcoin. And it's only going to let that price increase over time. And again, this is just what the conclusions I've come to from being in the space for the past 3 years. What do you guys think? Do you think that this article here is correct? And I'm going to, like I said, I'm going to leave these other 2 articles, and there's one more. I just don't have it on the screen, in the description below, and you guys do your own research. As always, DYOR, do your own research and come to your own conclusions, right? Because you shouldn't be using these videos as financial advice. However, you could use them as a jumping off point for your research. And again, what do you think? Do you think that they have a valid argument here about the stock to flow model? And I mean, this is just a little ridiculous in my own opinion. $235 billion per Bitcoin. Wow. Right? And yeah, I mean, let's talk about it in the comment section below. And smash that like, hit that subscribe button, notification bell to get notified when I upload new videos, and as always, thank you for the support. And yeah, I don't know. This is just a little ridiculous, man. It's Sergeant Crypto, and I'm out. Peace.